Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 89, NASDAQ off 31, S&Ps are off 12, gold contract down $19.10, trading at $1,210 an ounce. Silver off 18 cents at $17.03. Platinum down $6 at $1,260 an ounce. Copper down a penny and a half at $3.07 a pound. Light sweet crude up 65 cents, trading at $82.06 a barrel. Bonds, we have the 10-year down 14.6 at 126.16. 30-year is flat at 141.17. King dollar up 556 ticks at 86.03. The euro is down 87 at 126, and the yen is trading up 60 at 108.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so cash S&P out here today gets to 1991.40. Now, that number, folks, okay, gets you right at the underside of the channel that, there she is. I'll set this up right here so you can see what we have happening here. So what you have here is this. From the 1340 low on the S&P up to where we have traded today, we had broken the first week of October. Wide price spread, accelerated volume. We broke the channel line. That channel line is basically saying, hey, guess what? We can go to 1359 the S&P, cash S&P. We broke it with volume on the way down. Wide price spread, accelerated volume. What you have here today is that the top of that trend, you know, we hit 1991.40. It looks like this is an art more than a science here, folks, because what happens when you draw a trend line that's that long, it's like, okay, from 1992 to 1995, it's somewhere in that area. Bottom line, you hit the 1991.40, you can say that, okay, we hit it with lighter volume. That's what markets like to do when they do breaks downtown. Now, if I take a look at the SPY, the SPY right now is down $1.30. We do the same thing with the SPY. We take the SPY, we set it up. You take the trend line, and we set this baby up. The SPY happens to have just a slightly higher level here. Well, not really. Yeah, let me do this again, because what happened, oh, I see what's going on. That's on the day. I got to do it the 3-year weekly. So when I do this on the 3-year weekly, I knew this was higher. So when we do this on the 3-year weekly, whoa, it looks like it hit it too. Interesting. Okay, so on the SPY, yeah, we did hit it. Okay, so the SPY is 199.98. On the SPY, what we hit thus far is 199.12. Now, the volume is anemic today. Now, this is going to get intriguing. This is why. We have the Fed came out at 2 o'clock, said, okay, you know, quantitative easing is over. Not that, that was, you know, they were telling everyone that forever. The bottom line is that it is. They will reinvest those proceeds, though, for quite a while. Bottom line, so the SPY today, we've done 109 million. You're going into, well, no, okay, on a weekly basis thus far, we've done 299 million. Today, we've done 109. So let's say we're doing 500 million. 500 on a weekly, 500 million is going to be going to 872 million. On the daily, what we have is the daily basis. We're at $1.10 right now, so that's saying we're going to probably do about $1.30. $1.30 is going into 210. We'll see where this baby closes out. Right now, we're at 197.60. You know, the swing point it was going after this morning, it got over the 197.60. We're at 197.10 right now. It's got over the 196.62. Whatever one that closes will tell you just how bearish this baby is. Now, that being said, what we also have, and this we got to stay cognizant of this, is that we're at Wednesday, 2 days left in the trading week. We're at the end of the month. You're at window dressing. more than likely what you're going to see out here is we'll see another retest of the S&P, the cash S&P of today. And that retest also will be on lighter volume. And then what do we have? Then you'll have, instead of a Santa Claus rally, you're going to have a rally downtown to go visit its friends from the October lows. Because what we have out here, we have this high volume October lows that want to get hit, number one. And that high volume October low is a long way down. You're talking about 150 S&P points on the way down. NASDAQ composite. We go over to the composite. We take a look at the composite. What the composite has done is this. Composite is at 45.26. It hit 45.64. The high of yesterday was 45.64. So the low of yesterday was 45.05. We'll see whether we give that back. I do expect we're going to go lower. It's really a question. We're going to test the highs first before we go lower. The 3Qs. 3Qs have done 29 million shares. That's coming into 68 million. So that's saying also it wants lower price. Gold contract. Okay, so when the Fed come out and said that that's it with quantitative easing, gold contract goes south by $20. We take a look at this. What we have with the gold contract, right now we're trading at, you hit a low out here of 12.08. That's down $17.60. What you are doing, though, there's no juice behind this move. We've only done 118,000 contracts. You're coming into 192,000 contracts. So in order for that physical gold to break down, you're going to need a lot more contracts than that to basically stay down to lower price. Bond market still refuses to back off. The 10-year right now got down to a price point today of 126.06. We're at 126.17 right now. So you see a slight rejection of price, dramatically lighter volume, folks. That's saying that the 10-year is going to continue to move higher, not lower. We're at 126.17. The yield on the 10-year right now is 2.3. 30-year bond, we take a look at the 30-year. 30-year made it all the way back. And this is how the bonds have been operating, too, by the way. The 30-year has been leading the 10-year. So 30-year bond today gets down to 140.16. Right now, we're up a point and 2 ticks from that, which is 34 ticks, which is huge in the bond market. It did it with lighter volume. Rejected lower price. The 30-year is on its way also to the 148 area, and we'll see whether that's going to be a monster ABC up, because if it's a monster ABC up, folks, the A point on this is 135.13. Your B is 148. I mean, that's a monster. That's 13 points. And 13 points would give you a 153 30-year bond. Big numbers. Some of the high-volume stocks in a low-volume market. You had Facebook is down 490. We'll go back to that. Twitter is off $1.70. We have Gilead Sciences off 399. U.S. Steel is up 194. Some of the Dow stocks, what we have, you have, let's see, Caterpillar's down $1.17. You get Oxy up 53 cents. GM is down 76. J.P. Morgan is off 83. You have Hewlett Packard down 33. We go over and we take a look at Facebook first. And what you're going to see with Facebook is this. Facebook is down 497. Big volume on Facebook, 96 million shares. The amazing part on Facebook, folks, is when we were on last night, I was saying how unusual it is that there was no volatility in the stock. When Facebook came out with earnings, they were only down $1, then they went up about 80 cents. Then they came into their conference call. When they came into their conference call, they put a shocker on the community. They said they're going to spend $2 billion on expenses in the next year, and the stock tanked 7 points immediately. So we have what Facebook is this. Facebook has that high volume swing low at 70.32. We've hit 74. It's going to go after that high volume swing low. If we hit it with volume, you're going to see Facebook get to much lower prices out here. We go take a look at the... You stay right there. We'll be coming right back. Dow Industrials right now, folks, down 86. NASDAQ is off 31. S&Ps are off 12.5. You have gold down 18.40. Silver's down 17. Bonds, the 10 years off 13. The 30 years up 2 ticks. You're going to see both those bonds continue higher. We're going to come right back. Stay right there, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 70. Nasdaq's off 28. S&Ps are off 10.5. And as we do each and every Wednesday at 20 past the first hour, get our man, Mr. Daryl Martin. Don't forget, folks, Daryl is an outstanding show every trading day right here at TFNN. 1 to 2 Eastern Standard Time. He specializes in the Nadex platform, outstanding platform. If you haven't test drove that platform yet, the way you can do it, you come over to our website at TFNN. You see the banner on the top and the right. Hit it. They'll put $25,000 of paper money into your account. And, of course, don't forget, Daryl and I also do a great show every Friday morning, 10 to 11. And Daryl, he just dreams of days like today, okay? He's got a news day going. He's doing these spreads out here. And as you go on the Nadex platform and test drive it, come over to our website. Darryl has a scanner that will help you tremendously. And what that does, folks, not going to tell you where to go long or short, but what it is going to do is get you the best execution on the platform, number one, and it's going to tell you what contracts that you should be looking at for the strategy that you want to place. Darryl Martin, what's going on?
Man.
How you doing, man?
We're doing fantastic. So, I mean, it's a crazy day.
Yeah.
If you're a futures or forex trader, you better get out of the way, right?
Right.
So, but if you're in a futures or forex trade, you could hedge with the spreads.
Yes.
Just, like buying a put on a stock or, buying a call,
right.
If you're short the stock.
Right.
Or hop in on the spreads and, or do, premium collection. But there was some crazy, just fast moves. It was insane.
Because the biggest move, so check this out, folks. On the Nadex platform, you can do the indices, you can do commodities, you can do currencies, okay? And, the currencies out here moved beyond belief, okay? You had the dollar, go to the moon, the euro go down to hell, gold go to hell. You're talking some big numbers here, folks.
Yeah, it was massive. They're just flying right up.
Yeah, and to give you an idea, the dollar, folks, we went from 85.48 up to 86.13. All you need inside any type of currency move is 20, 30 pips is big. Never mind 500.
Right.
Yeah, totally.
But what I mean, and it's one of those things. Like, I mean, I love to trade this announcement, but I can't imagine trading it without either having something that basically defines my risk without having a stop. Just because I mean, these, they'll just fly down and then fly back up, or sometimes they'll just keep going and going and going. Like US yen, I mean, it just took off and just ran all the way. Like actually right up. We're actually sitting at one deviation level, and then it flew up and then stopped at one deviation.
Let's
right there.
Put that. Look at that. So we can put that for
the dime.
They can see it. Look at that move. My God.
Yeah, just like it flew up there. So I had an entry at 108.20 to go on up, and it just flew up. And I was like, okay, I'm going to go short up here at 108, which is like just above the one deviation.
Right.
And it turned right back around. So and came on back down to the target.
And so, inside the scanner, folks, he has the deviation levels. And what's so cool about it is what Darryl just kind of laid out there, is that you're looking for deviation moves, number one. And most of the time, folks, you're not going to get them. Okay? You get them on announcements like this. But when you get them, you certainly wouldn't be putting the trade on up there. What he did is that he took off that profit. Now, check out how this works. This is what's really cool. You take off the profit. And then what ends up happening, and I don't know this, but I'm speculating this, the next trade that he put on going south on the yen is less expensive than the profit, right? I mean, because I know how Nadex works. Do you know what I'm saying? So it probably costs you less to put that trade on, right? And you still have money in your pocket, more than likely, right?
Exactly.
Yeah, I know, which is a trip. I know. Because that's a whole different animal, folks, when that happens. It's
So you hop it in, because I mean, if you just leave it in there and you don't take it off, then I mean, your profits evaporate. But
and you don't have it. You don't have it, right?
It's so hard when you're in that trade. Like, how much is enough?
Right.
You know what I'm saying? Like,
right.
Never. Right. So you have to have something that objectively outside you says, hey, this is the most the market should move.
Right.
And that's where to take it off. Yeah, I didn't write it all the way up there. It's my final target right there.
No, sure. And what's cool, you see, what
we post these for you, like right here. So they're all posted black and white. There's no guessing about these levels or anything like that.
Right.
So.
And what's cool, folks, is that, when you have a strong move like that, it doesn't mean that, you're going to move even halfway down off of that. But what you will get inside this Nadex platform, which is so dynamite, is that you're going to get, you're banking on you're going to get a slight move. But that's all Darryl needs right now is a slight move, okay? He's certainly not banking that it's going to be what he got, at 2 o'clock Eastern Standard Time. But he doesn't need it. That's the other side of it, right?
Exactly. You can go in on a small move, you can go in on a large move, and either way you can play the trade.
Right.
So, so that way, if there's flat volatility, you're fine. If there's insane volatility, then you have an instrument where you can define your risk. You're not just completely exposed in case because it could just fly against you. It could have been the exact opposite direction.
Oh, sure. Right.
And so, I mean, I had some trades that went both directions, so but by having that balance out where you can make a lot of profit on one trade but have a defined risk on the other, then it actually can come out in your favor.
Yeah, there's no doubt. And what we have had, folks, and I expect that we're going to continue to have, is high volatility. You know, this market was slow and steady for longer than I've seen in years. And then all of a sudden, you know, you have volatility in. When you get volatility inside the marketplace, most times you're going to have it for a year, year and a half. That's what it comes down to. You don't have volatility for 2 or 3 months, and then all of a sudden it stops. You can have it for 2 or 3 months, slows down for 3 or 4 weeks, bang, hits it again. You know, and that's what, to me, that's the market that we're in right now. You know, of course, what does happen is the definition of volatility in the marketplace, and always seems that it's going down. Well, in this case, you had it both ways. You know, we went down to the 1820 in the S&P, and we went back up to the 1991 just as quick. So you're talking about a two-way type of volatility move right now, which is pretty amazing, man.
Yeah, and I mean, and I love these. Like, I like it when it's flat, because I mean, go in there, it's just, you know, you go in and just grab a few ticks and make a nice profit on it. Or, I mean, when you know, like, what's beautiful about FOMC type stuff is you know big movements coming. Right?
Yeah, right.
It's not like, oh, where'd that come from? I mean, it's going to happen at 2 o'clock, you know, and so you can.
Which is huge. I know.
Yeah, because you can plan for it. I mean, it's like know when it's going to happen and then find the best contract to take advantage of it. So, I mean, yeah, fantastic. And then now you've been trading on the spreads too. You've been checking those out. We've done some of those trades together, and that's been working well. And one of the things I was talking about today on my radio show was we were going in, and a lot of traders, they get in, they trade futures, or they want to trade futures, but they're so rightfully so intimidated by the value. You know, $10 a tick, you have a $2 stop loss, it's a $200 loss. What if you just have a $5,000 account, right? Right. And so one of the things I was talking about, I'm going to go into more detail tomorrow on my show, is how you can go in and you can trade the NADEX spreads just like you're trading, you know, a future contract, but it's only $1 a tick.
Right.
And it's a really good way for people to get into futures.
Right.
Or those who are already futures traders who have the comfort and already have the account size. It's an amazing way. Like I said, my favorite strategy is to actually hedge my futures contracts with NADEX spreads, just like I'm using a put. And but I mean, for the brand new traders out there that are wanting to get into things and get involved and check out futures, check out forex, but they feel like it's all complex and the margin's too high, and you know the risk is too high and the leverage is too high, they can take advantage of it and not have to deal with all those complexities and all that additional unknown risk.
It's huge, man. Listen, man, thank you so much. You have a great night, safe night. Of course, we look forward to the show tomorrow, Darryl.
I look forward to it.
Awesome, man. Have a great one. Have a safe one. Stay right there. We'll come right back, folks. Dow's down 63. Nasdaq's off 25. S&Ps are off 9.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies, and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, I get the Dow down 33, Nasdaq off 16, S&Ps are down 5.5, and it looks like this little baby, it's going to be interesting watching how this whole thing does shake out. Specifically meaning that will you get that test of the high of today, and do you get it tomorrow, or do you get it Friday? We'll see how this baby shakes out. What you'd be looking for, folks, is simultaneously harmony inside of all those tests. So if we take a look at the SPY, the high in the SPY is 199.12 today. What you have is that we have a high volume intraday low, which is sweet in itself. That's 197.23. We're at 197.98. What you'd be looking for is that goes up to the high, that tested on lighter volume on the daily basis. And simultaneously, what you'd be looking for is coming over to the Qs, the 3 Qs. 3 Qs right now are hit a high of 100.112 today, $100.12. You'd be looking for that to test it on lighter volume, and you can go over to the IWM. The IWM is not at its highs, but the IWM had a nice day yesterday. Now, it got over the high, has lower volume today, and it didn't reach a swing point, which is important to understand about the IWM. It never got to a swing point. You know, the swing points are where the markets talk, walk, and squawk. The swing point on IWM is dramatically higher. We're talking about 117.80. We've made it to 114.89. So we'll see how this does shake out. But timeline-wise, what I do expect you're going to see, the volatility is going to continue higher. The testing is going to be over and over again, end of the month, beginning of next month. That's how this is shaking out right now. The gold market. So let's go over to the gold market for a second, because if we look at the GLD, so the gold market's getting smoked right now. Volume's not expansive, but it's there. The GLD, we're doing 6 million versus 10 million. So the GLD is also going to need more volume to break out that low. The gold contract itself is going to need a lot more volume. Price-wise, though, we're down 20 bucks. We've done 120,000 contracts thus far. That 120,000 is going into 140. 140 and well, it's actually going into 192 right now. 192, the low is 1205. We've hit 1208.20. Coming into Thursday, looks like it's going to basically go after it and whack it. Now, here's the divergence. We go over to King Dollar. King Dollar up 532 ticks. But King Dollar also doesn't have juice underneath it. What King Dollar's done is this. We've got to 86.13. Now, the high of the 15th, this is crazy. I don't know how this does this. This just blows my mind when this happens. Okay, so check this out. Doesn't mean it's going to stay here. So October 15th, folks, is one of our benchmarks, and all the indices on the currencies and everything. That's the day that the bonds went to the moon, market went downtown, made a bottom, bonds made a top, pulled back, reversals all over the place, right? Well, the dollar index that day got to 86.130. And the odds of that hitting it right on the button are pretty wild. But guess what? That's exactly what we just did. So, and we're hitting that with 34,000 contracts versus 116,000. We'll see if that's it. You know, couldn't handle it, comes back down the other side. The aspect of the bond buying stopping, of course, is putting strength under the dollar. What you absolutely will have also, though, is this, is that the Fed itself is going to reinvest. Okay, so they've been, the last 5 months, each and every month, they've bought $10 billion less in bonds. On their balance sheet right now is $1.66 trillion. What they are going to be doing, however, is that as those bonds expire, they're going to buy new bonds. So, what does that mean? Well, that means, number one, that the that the demand for bonds is going to be there. What I expect you're going to see, though, is that the dollar itself still is wants to move to lower price after we get this test right here. Let's go to Dan in New Jersey. Hey, Dan, what's going on?
Hey, Tommy. Hey, I know IWM didn't hit any swing points, but didn't it hit a 786 retracement?
It probably did. Let me pull this up. Yeah, it probably did. Right. Because
I got stopped out on, I tried to go for the 618 and just looked like it hit that today by... Yeah,
it did. 114 point, looks like 114.42. Looks like the 14, I can't read it. 114.52 is the 0.786, yes.
So would you wait to try to pull the trigger again on this? Would you wait for a test of those highs? Or?
Now, are you going long or short?
Short.
Yeah, wait. What's going on here is this. This is why I'm waiting right now. What you have with the Fed meeting day, right, is that we have two different things happening. Nothing's really changed, okay, in the context of what they said. They said this is what they're going to do, right? And they told us that forever. We have the end of the month and the beginning of, window dressing happening, right? The cash S&P, I was talking about that 1991 level, right? when you're on a Wednesday, you come into a Thursday and Friday, and you've had a higher market for 3 days, it's like, you know what, end of the month, beginning of the month, this wants to test again. And I think we're almost there to basically pull that trigger, but I would just wait, let the test come in, and simultaneously, what would be the ultimate one, and this is where the patience is going to be the hardest, folks, is let the test come in, and the correlation should go like this. The test should be on Friday because the volume would even be dramatically lighter. Then what you have, I'm trying to figure out myself even on Monday or Tuesday, because what happens is this, folks. You have the end of the month where the window dressing is the most intense. But then at the beginning of the month, what you have is that all the IRA money comes in. That money just comes in. It's not people that are saying, hey, I want to buy something. It just comes in. It gets taken out of paycheck. So what that does is puts a little bit of fuel in the marketplace. So it's like, okay, is it next Monday or Tuesday? That's where you got to do those correlations slightly. Do you know what I'm saying?
All right. Hey, if you got a sec, I want a quick thing. I got just 2 Facebook puts. I got them yesterday at the money at 80.
Okay.
They're weekly, and they expire next Friday. With as much going on, do you think I'd just do better enough just to hold on to them until next week?
I'd take one off right now, because if you take one off, will it pay for both of them?
Yeah.
Yeah, that's what it do. And then just lay it out. You see what I'm saying?
All right, cool.
That's a way that once you take one off, you have zero risk. And then,
right.
And what happens with the zero risk, folks, is that you can wait longer. You can go right to the close then, man. Do you know what I'm saying?
Yeah, that was hats off to Larry on that one. He mentioned that Monday show.
Sweet.
Thanks, man.
Okay, man. Have a great one. Have a safe one.
Bye.
When you and this is what happens, folks, also in the Nadex platform. When you're dealing in the option market, the bottom line is that one day, okay, 2 puts, they're in the money. Facebook was, down $5. Now, what happens there is this. What is happening, he has 2 separate issues going on the pricing power of that. Number one, he was right on the trade, so it's down $5. That puts, and it's an 80, okay? So that puts big dollars in the pocket. That's the first part. The second part, folks, goes like this. Because this next week, there's more premium in them. Now the market maker wants more premium. Why? Because there's more action in them when the volatility comes into it. So when you see that, the best way money management in order to basically handle that is you sell 1/2 of the position, you get all your money back. Then you have 1/2 of the position out that you can hold a much longer period of time with the aspect knowing that you're not going to lose anything. It's impossible to lose anything. Next week, what he would be gunning for is this. He's gunning, might take that high volume low out there at $70. So you're gunning for $70. That's $75.83. It's like, then you pull the trigger there, nice money, right? Okay, so that's one way, and that's the way that I would do it. Then, so the question that I'm sure many people have in their head out there, well, hey, it went the right way. Why don't we hold both of them and then we can make even more money? That's a legit question. And what happens there is this. If, in fact, you just go down into the $70 and you don't do a counter-trend bounce, guess what? Yeah, you make a fortune. You're going to make double with he was just going to make with risk. The other side of that, however, is that you hold what you have here. It bounces, and it bounces slightly. All you have to do is bounce slightly. Then you're not making as much. And also, folks, what's happening is the premium's coming out of it. Because as soon as that starts bouncing and gets a little less volatile, the premium's going to get sucked out of it. So those are equations that you want to do all the time when you're in the option market. Dow Industrials right now are down 22, NASDAQ off 15, S&Ps are off 3. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is down 28. Nasdaq off 14. S&P's off 3.5. And check this out. This is just awesome, folks. You know, as I was going through the different scenarios for the S&P, doing a retest, one of the tigers in the den said, it's pretty bad I forgot this, but bottom line is I forgot that the election is on Tuesday, this Tuesday. So what you're going to hear and see, and this is what's going to be amazing, because what you're going to be able to get out of this is not only just how the market moves, folks, but with the political front, you're going to be able to get the hypocrisy whether the Democrats or the Republicans win. Because what's going to happen here is this, is that no matter who wins, what you're going to see is that the other's going to be blamed for the downdraft in the marketplace, okay? So, yes, there is no doubt when you line up the aspect of the end of the, well, when we first line up the aspect that it's testing the channel break from the first week of October, that's the first part. Then you line up the window dressing, and then we line up the election on top of it. It's just perfect. It's just a perfect type of setup for that whole scenario. Because there's no doubt that politicians just absolutely love rewriting history. And we've seen them do it. We've particularly seen them do it in Florida, folks. It's pretty amazing. It's just amazing. I happen to live in Florida now, but listen, all these politicians just rewrite history on a continual basis. And what has happened, there's no doubt. You know, I remember growing up and just you hear the stories about politicians on a continual basis, and you know they've always had a rough record. Now, though, it's just blatant beyond belief, and it's just hundreds of millions of dollars that are spent. But what I expect you are going to see there, no matter who wins, you'll see the deal go down the other side, meaning that it's going to be the other person's fault. That is why the market is going south. So it's going to be wild watching this thing check out. After the close out here today, we're going to get lots of earnings, folks. Each and every day out here, you know, for the next 2 weeks, there's going to be big numbers. In fact, Panera came out last night. That was getting whacked pretty good. It's down $6.30. She has volume behind the move. Yeah, she wants to get down to that high volume spike down there at 154.80. After the close out here today, we're talking about big numbers, though. Big numbers. The 3D printers have been getting hammered all day because Hewlett-Packard is getting into the business. I want to thank our tech expert at TFNN, our man Dave White. He's been all over that. There's no doubt about that. And you get 3D down at $1.80 today. This is an equity that was off, you know, down from $69. You're at $37.13 right now, and you know this baby looks like it's going to be another ABC structure on the way down. I mean, it's just coming down with juice. And if you want to see an equity coming down to the last time it had any volume, man, this is it. This is so crazy when this happens. But all those 3D printers coming down. They're coming down with some good juice behind the move. What we do have, the last thing, let me see, HPQ. Let's see. So Hewlett-Packard's flat. Hewlett-Packard unveils cheaper, faster. Hewlett-Packard unveiled a new 3D capable computer and speeder 3D printer technology as it prepares to spin off its personal computer and printer business. The company introduced Sprout, $1,899 computer that lets people scan and manipulate 2D and 3D objects. It will be available early next month online and in some stores. Hewlett-Packard also say new 3D printer technology will make the process cheaper and faster than competitors. That's pretty intense. You know, of course, the Hewlett-Packard in itself is all about printing. Let's go over to the GDX. We had a couple of questions about the GDX. The GDX, folks, is the Market Vectors Gold Miners Trust. Inside that trust, what you have is Gold Corp is number 1, 13%. Barrick is number 2 at 12. Newmont is 3, 8%. Franco-Nevada is 6%. when we take a look at this, it is definitely spiking the lows. You have a volume here of 44 million. At bottom line, it's got to get back inside 20.11. Right now, you're at 1969. We put this on a much larger basis, and what you're going to see is that you're going after these lows. You know, what I would be looking at more than this, because it's traded for a longer period of time, is the HUI. The reason being is that the HUI, we're down $6.99. We'll get the volume later on tonight. But what you do have thus far on this volume is you're coming into the lows with dramatically lighter volume. The lows that we're going after are those 2008 lows. We did 528 million shares, and thus far, not counting today's, we've done 349 million. So that is saying that more than likely we're going to come into it, number one, but you're going to come into it with over 120 million lighter shares. It's not a bad setup. Not a great setup, but not a bad setup. But that is saying that, yes, you can get down into lower price out here. That's how that is setting up right now. If we do look at that was the HUI. If we look at the XAU, we take a look at the XAU out here. That is breaking into another low, down 287. We put that on a 10-year basis. We bring this up and put volume on that characteristic. The XAU, that swing low has 693 million. Yeah, see, the XAU is in a different ballgame. And we've done, it's still going to be lighter volume, but still more volume. And with that, you know, see, this is where this gets wild. Now, that's the technical view. So it's coming in with lighter volume, but the volume's still pretty good. That is saying the XAU can go lower. What that says to me on a fundamental basis is that means that the actual gold contract is going to go higher. Why? Because what happens in the XAU is that stocks that are in the XAU versus stocks that are in HUI can sell forward. So the real key is that, you know, do we see 2 or 3 months from now gold companies selling forward product? Right now, gold's at $1,210. So we see them selling forward product at $1,210 when, in fact, gold ends up being the $1,300, $1,400, $1,500. And they're selling out at the lows versus waiting, not selling, all of the above. You know, we'll see how it shakes out. But that correlation has been going on for quite a while. We go to the silver market. What was encouraging here is the silver market has not broken, folks. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming back with a lot of earnings for you, folks. Dow finished down 40. It looks like it's going to finish down 40. NASDAQ off 17. S&P's up 4.5. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by an unknown. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We had the Dow Industrials down 31, NASDAQ off 15, S&P's off 4.5. Gold contract down $18.70, trading at $1,210 an ounce. Silver down 19 cents at $17.03. Platinum down $5.50 at $1,261. You got copper flat at $3.08 a pound. Light sweet crude up 87 cents at $82.28 a barrel. Bonds, you have the 10-year down 15 ticks, 126.15. 30 is off 6 ticks at 141.11. King dollar up 607 ticks at 86.08. The euro's down 98 at 126, and the yen's up 74, trading out at 108.90. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, what do you have? Okay, check it out. We get to 1991.80. You do 811 million shares. You get over the high of yesterday. You're over the high. You're right into the channel line from the downtrend, folks. This channel line is a powerful channel line. You know, this channel line, so when you deal with channel lines, trend lines, support, resistance, their importance has to do with the amount of times that you've either hit them, come up to them, tested them. You either fail or succeed, meaning you'll either bust through them, bust over them, all of the above, right? This trend line here is important in the aspect, so let's bisect and dissect this, because this is what first off, any type of long-term trend, it's great if you can trade off longer-term trends. It's much harder. Why? Because it takes the length of time in order for the actual trends to develop. In this particular case, what you're going to see, the trend that we're talking about, this trend starts in November of 2012. Each and every time that we've come down to the bottom of this line, you've had an expansion of volume. The first time that we came down was the first decent contraction we had after going up for almost a full year. That's when the S&P went from 1687 down to 1606. Big deal, 87 points, right? Yeah, 87 points. That was in June of 2013. Then what ended up happening? You go higher again. You go to 1729. You pull back down to 1703. We go up all the way till January of this year. We go to 1850, and you back down to 1737. Now that one there, that was the largest one to date in the last 2 years. That was 130 S&P points. You go back topside again to 1897. You come back into 1815. Not that big. You go topside again. You go to 1991. You come back down to 1904. So that one there was 91 points. So you have one with 87, one with 91. You go topside again. Then what we do is this. We go from 2019 straight down to 1820. So then you're talking 200 or exactly 199 S&P points. Big numbers. Wide price spread, accelerated volume. The key to wrap your head around here is this. As it goes down, it hits the trend line. It keeps basically weakening the structure, the channel line, weakens the structure. Now what we've done, you break it, you're coming back up, testing it. And the real key is going to be, does it hold? Meaning, so you can look at this two different ways. As you come into the trend line, if you break this trend line specifically with conviction, meaning you get back inside the range, well, guess what? You can go a lot higher. And it's going to be, do we get back inside the range or not get back inside the range? And how do we do that? Because if you only just sneak your head back inside the range and it doesn't have the juice, then you're going to be right back downtown. Why am I saying that? Because the way that we broke the trend line. We broke the trend line with wide price spread, accelerated volume. First part. Second part is actually a little bit more important. And what the second part is that we never reached the benchmark, which is the week of February 7th in the S&P, where the high of that is 1798 and the low of that is 1737. And the confirmation is that there are so many equities themselves inside the S&P, large caps, that have already reached down into that benchmark. Well, that benchmark is going to get tested. So we're at an inflection point right here. And, you know, we'll see how this baby shakes out in the next couple of days. If you're listening to the first segment, what I expect we're going to see here between end of the month, beginning of the month, and as one of our targets brought up, election on Tuesday, I think this thing will probably retest, going right up until Tuesday. After the... Okay, let's go through the rest of the markets first. Then we get a lot of numbers coming out, no doubt. NASDAQ composite flat market out here, down $15, flat market, 2.1 billion shares. Now, what's interesting about that is like, okay, you're pushing highs, you're pushing lows. The composite itself probably wants to still test the high of yesterday, which we almost got to. We missed it by all of 29. Well, I guess we got to it. 4564, yeah, we basically finally got to it. We'll test it again. The 3 Qs. Now, here, watch this. Inside the context of the SPY, the 3 Qs, absolutely no juice. We did 135 million. You're going into 150. You're going into 186. That's on the SPY. We take a look at the 3 Qs, what you have inside the 3 Qs. 3 Qs did 39 million shares. That baby's going into 68 million. So the juice certainly isn't there as it's going up into those levels. After the closeout here, let's see what we have. CRUS. We'll start with Crush. This is Cirrus Logic. That closed at $21.89. That's trading up $1.10 at 23 right now. Numbers go like this on Crush. The estimate was 56 cents. They made 68 cents. Big number there. The margin is 47.8%. Their revenue estimate, 285 versus 265. That revenue estimate doesn't look great to me. So this will be interesting to see whether that can stay up $1.10. And right now, yeah, $1.10's not enough for that stock, but we'll see whether that can stay. That can stay up. We'll stay up $1.10. BIDU, Baidu.com. That's always a high volatile stock. That closed at 224. It's still trading 224. Yeah, I don't see that one yet. Maybe it's out earlier. Oh, it's down 441 already. That must have been out this morning. JDSU. JDSU closed at 12.43. That's trading up 50 cents right now. And the estimate on JDSU is still in a loss. This is interesting. So the top line estimate was 416 million. They took in 433. Be the top line. Bottom line, it's hard to tell what the bottom line was. I can't get that quick enough. Sorry about that. That's in a consolidation, though. That's the way that looks right now. Weight Watchers. This is always a highly volatile stock. Let's go take a look at what Weight Watchers has done out here. Weight Watchers closed at 29.42. It's trading at 29.50. No big deal. That earnings per share was 67 cents. The revenue was 343. TTWO. This is Take-Two Interactive. That closed at $22.80. That is trading out at $23.75. So out of those ones we just pulled up, most of those up a good point. This is Tom O'Brien. This is TFNN. Dow Industrials closed down 31. NASDAQ off 15. S&P's off 7.5. And as to quantitative easing, folks, Fed come out with the number, well, with their statement at 2 o'clock, and that is going to be done. They're still going to reinvest that $1.3 trillion, however.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We take a look at Visa. Visa just come out with numbers. Visa closed at $214. That's trading at $224. That's up $10 right now. And let's go see what Visa has to say. Another share buyback, that's for sure. They get these share buybacks going all over the place. So revenue, fourth quarter revenue, $1.5 billion. There's some big numbers. Earnings per share is $1.72. Their revenue, or the service revenue is $1.5 billion. Their actual revenue is $3.23 billion. Big numbers. Cross-border volume was up 10%. They see, okay, they're setting a 5. Okay. $5 billion buyback. Let's see what we got here. Okay. So Visa reports new $5 billion buyback. Their market cap is $133 billion. Big numbers. That's the bottom line. We're going to take a look at Visa. We put this. So it's up $10. This is where it did. Visa's going to fill the gap. Visa had gapped down. The last report out on the 24th of July, it was trading at $223. It gapped down to $211, made a run all the way down to $195. Now it's going to fill that gap. The real key is going to be you fill that gap with juice, or do you just fill that gap and give it up at that particular point. Visa hasn't backed down at all. In fact, this is going to be interesting watching this thing shake out. Why? Because the way that Visa has traded So check this out. This is an amazing chart, actually. Visa was $64 in 2010. It goes all the way up to $235. Now, it's been trading on a monthly basis sideways for approximately almost 2 years, a year and a half. That's pretty intense. You know, if Visa could get some juice into it, coming at those highs, you might get much higher. Right now, there's no juice up at these highs. It's been going sideways from, excuse me, folks, from the 235 level down to that 195 level. MasterCard, we're going to take a look at MasterCard. MasterCard closed out here at $75. MasterCard is trading $78. It's not that they're coming out with numbers, but what you do have with MasterCard is that that'll trade kind of like the same deal. We go over to the monthly basis. MasterCard, man, you talk about same business, same chart. This is pretty wild watching. And there's no doubt that electronic payments are there. What is going to be interesting is to see what happens the first time that the electricity goes out, or there's a hurricane, and or whatever happens, because folks that have been around for a while understand you get a hurricane, you can't get the cash, it's a problem. Younger folks, some of them not in areas that get storms, have absolutely no clue that you can be up a creek without a paddle at about 2 seconds flat. So it's a big issue. Let's go over to the we're going to go to the oil market. Then we're going to go to the XLE. So oil's at 82.16 CLZ forward. We take a look at this oil market. This is still an ABC down. This is going to be wild watching this thing shake out. Oil's up 73 cents today. You have volume of 265,000 contracts, and you're going into 355,000. That's saying, hey, oil's going to be shaken out at $75. And the amazing deal, no doubt, when you hear the financial press talk about oil, folks, they don't like oil at high prices. They don't like oil at low prices. And it's like oil at low prices is bad for the economy. This is what ends up happening. When you hear that, folks, what you absolutely want to wrap your head around is this. Listen, low oil prices are dynamite for us. That's the bottom line. They're absolutely dynamite. For us as individuals, as communities, as saving money. What they're not good for, and this is where, now this is the yin and the yang of it, because, of course, many, folks have the IRAs out there. The bad part about it, of course, is that inside the S&P, you have a huge energy complex. And inside that complex, the large integrated oil companies are a huge part of it. Now, certainly, when oil is going down, it's not great for them. If we take a look at ExxonMobil first, okay? ExxonMobil, you're at $94, and it's going to make its way down to 81. We'll see what happens at 81, but it's definitely going down there. But what you want to do is that you want to step back from the aspect that when you hear, and just use some common sense, and just all you have to really do is listen to some of these commentators, and it just absolutely blows my mind, because they will do anything and everything to basically confuse the issue when the issue is very simple. Low oil, heating oil, gasoline is absolutely dynamite because it's a tax cut, because we can't depend on Congress to basically do anything. What ends up happening is that for all the folks in the Northeast, for the folks in the Midwest, this heating oil this year is going to be dynamite, okay? My take is that we're going to get even lower. Right now, you're at $253 wholesale, and this also looks like an ABC structure on the way down. It's going to get it to $225. That's a big number, okay? That's a nice number. That's a big savings. The gasoline feature inside that, right now, wholesale's $225, and that hit the first target. So the ABC down inside the gasoline market has hit, but check this out. This is where this is going to get really wild. Right now, when we and it was the full price projection. 225 was the number, actually. So we're 222. And what we've done today is this. We've done 13,000 contracts going into 53. So the gasoline market is saying that it wants to go down another 50, no, is it 30 cents? Let me see. The low's 13 cents. So you get 41 cents. Check this out. This is really cool. 41 cents. So the gasoline market saying it wants to go to $1, 25, 35. Oh, this is $1.85. $1.85 wholesale, folks. That's the next ABC structure on the way down. You know, we'll see how we go after the B point. This has come down from $2.84, but guess what? $1.85. That would be just fantastic. What that will do, however, is that, yes, that will hit the large integrated oils. But can you imagine the amount of money that we all save? And it's not that I even drive long distances to work, but, you know, doing the real estate business, I drive a lot. The folks that have to drive every day, though, 45 minutes, are going to save a fortune. You're talking about big money, folks. You're talking probably $1,300 to $2,000 a year that you save. And, of course, if that's what you're saving, what does that mean you have to make? Depending what the tax structure is, that can be anywhere from $2,600 to $2,800 to $3,000. So it's a big number that will get pumped into the economy, which is just dynamite. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials closed down 31. NASDAQ off 15. S&P's off 7.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Baidu, when I had first pulled that up, bottom line, they had stopped the stock. They just opened the stock. Stock closed at 224. It's trading down at 215. And it looks like they made their numbers, but the estimate was 169. They come in with 190, but there must be an adjustment in there somewhere. Let's go to a John in Philly. Hey, John, what's going on?
Good afternoon, Tommy. I'm going to ask you if we can change tax here, go over to the ag commodities.
Let's take a look.
Tommy, I'm very interested in just some of your detailed knowledge of trading gaps and what have you, specifically soybeans. What has gone on, Tommy, is this. Back in September, the lead contract was a September contract, went off the board at 1045. Then that led to the November contract, which was trading lower.
Yeah.
And leaving an open chart gap at 1045 on the daily continuation chart. Now, Novi beans went down to 945. And in the past 4 weeks, they've spiked up, and they came exactly today to 1044, right to that open chart gap. My question, how, as a trader, forgetting what the instrument is, how does one handle trading around gaps, please?
Well, a gap is just like a swing point. So what that means is that that's 100% move or move. And 100% move or move, most of the time you're taking your money, you're not putting a new trade on. And so let's say the beans, like I don't see the gap because I have the contract up we're trading right now. But when I look at this is a nice setup that, okay, it's really coming into ice also. So in that texture, it's like, man, I mean, the way this is coming into ice, it looks like it's going to blow it apart in about 2 seconds, actually. It looks like it wants 11.05 in a heartbeat. So if you're long, yeah, I'd keep a tight stop, and you probably get 11.05, then take the bread off the table. Then you get a pullback somewhere to 9.097, and then it pulls back there with lighter volume. You get some action, man, and you probably got an ABC up that'll take you into 11.58. That larger downdraft, John, from the 1242 to 1158. They're the ones that's the magnet, man. That's what likes to get tested, you know. But I don't expect you're going to go straight there without a pullback first. But that's the one that likes to get tested, man.
Terrific.
Yeah.
Tommy, listen, thanks so much. I appreciate it.
Okay, man. Have a great one. Have a safe one. After the, let's go over to Zillow. Zillow closed at 105. That's trading at 101. Numbers. Let's go on numbers on Zillow. Let's see what they're saying. No. Okay, that must be off Trulia then. Let's see. TRLA, because Zillow didn't come out yet. Yeah, it's going to be off Trulia. Okay, so check this out. So Trulia closed at 44.56. That's trading at 41.82. And let's take a look. Okay. Third quarter adjusted loss, 8 cents versus the estimate loss of 9 cents. The revenue was 67.1 versus an estimate of 69. See, that's it. It's the revenue model. And what it is, the estimate was 69. They came in with 67. So Trulia is down $4. And if we take a look at this, what you're going to see, oh, this is pretty amazing. Right back, oh, what a classic this is. This is crazy. So Trulia, I believe, is getting taken over by Zillow. And I don't know if that's a cash price or what that is, okay? But what you're going to see is that Trulia had spiked from $40 going all the way up to 67. What does it end up doing? It's at 44. And this is what you want to watch like a heartbeat, folks. You want to watch how it trades into the $40.16. The reason being is that that's a break area on the topward side. And, you know, that area is important in the context that it's a high-volume spike. And Trulia itself has a higher volume high at 67.50. And the both sites, okay, are extraordinary sites in the aspect if you're in the real estate business. Now, check this out. This is really cool, you know. So you know that we have the Tiger Real Estate Opportunity Fund, okay? So the fund itself, folks, okay, we buy singles, we buy doubles, we have short-term rentals, we rent a lot of them, we do short-term rentals, we sell a lot of them, right? Now, when we sell product, we basically market them ourselves because I don't want to pay 6%. That's what it comes down to. I pay brokers 2%. We put the product up online, buy, sale, by owner, but we get the multiple listings going. So stay with me for a second, because in the context of Trulia and Zillow, their pricing model, which is a great model, no doubt, is the agent model. Okay, so the agent model, they're advertising, the agent model, they get the whole ball of wax. My larger take on this goes like this, that both those companies look technically that, yeah, they're going to go higher, okay? That business in general, though, the business in general is going to get disrupted because I just can't see the clarity on, and I know real estate brokers are going to not like this, okay? But the reality is I don't see the aspect of paying a 6% commission on a continual basis. There are a few brokers that spend enough money on marketing that, yeah, I could see that happening. That few is minute in compared to what the actual transaction is. So what do I see happening? I see the aspect, I can get properties out, and in fact, I get properties more out than just about any agent out there. The reason being is that we'll put some marketing behind them, pay less. Now watch how this works, though. This is where it's real. This is where the disruptive deal comes in. This is what it is. It has to do with a listing broker. So some of the biggest brokers out there are only listing brokers. That's all they want to do is list, list, list. They put it out there. They get you to sign the 6%, 5.5%, 5%. They list it, and then they don't do any other work. They want someone else to sell it. So the other side of the transaction only gets 2.5%. Well, guess what? We pay 2%. So it doesn't matter. If someone wants to bring someone there, they're still getting 2% net. So in the context of a Trulia and a Zillow, I don't think they're going to have a problem right now. I think 3, 4, 5 years from now, they're going to have a problem. Why? Because the structure itself is going to get lower and lower and lower. And and why? Because of the fact that the public in general, and it won't be, this is a slow process. That's what it really comes down to. It's a slow process. We'll see where the whole thing shakes out. When we talk about the Tiger Real Estate Opportunity Fund, if you happen to be in the St. Pete, Clearwater, Tampa area, tomorrow night I'm doing a live workshop, dinner presentation at the Bel Air Country Club. It's from 6:30 to 8:30, and what that's all about is the First Mortgage Program. The way that program works is that we pay 5% on an annualized basis for 4 years. It's paid monthly. It's secured with the real estate. The loan to value is 70% of the third-party appraisal. If you'd like to come to that live, see the properties, see exactly the documents, see how this works, just go over to our website at TFNN. You're going to see it right on the front page. If you happen to be any place else in the country and you want to see how this works, or in fact, if you want to see how it works before you come to the presentation on sign up, just go to TFNN. On the right-hand side, you see the Tiger Real Estate Opportunity Fund. Hit that button, that banner. When you bring it up, first go to the mortgage portfolio. You'll see the properties that we actually have. Then take a look at the actual documents that you'll receive. You can take a look at the note, the mortgage, the title insurance, all of the above. And then if you have any questions, just give me a buzz at the office at TFNN. What is going to be interesting, though, is to see what has happened, folks, on the Trulia site and the Zillow site. I actually like Trulia better. It's just easier to seem. It seems like it's easier to get around. That's why Zillow probably bought them. But what you do have is that it opens up. It's like, okay, so why doesn't everyone, bottom line, do this themselves? You know what blows my mind? Oh, check this out. This is pretty cool. If you are, folks, if you're looking for a place, I've had this happen. We just had this happen. And the person saved $2,000. Okay, so we pay 2% to a broker. And I get the call in, and the properties that we're selling, I take the calls, okay? So I get the call in, and the person says to me, well, I'm going to call my broker to call you. I says, well, why do you want to do that? He says, well, you know, I've been working with this broker, and I wanted to call him, you know. I says, well, just so you know, I says, what ends up happening at that point is that, of course, the broker's going to get 2%. So your negotiation power has gone down dramatically. And they took about 30 seconds on the phone, and they were quiet. And the next thing, I said, okay, then we got off the phone. The next thing I knew, guess what? I had an offer coming across the table from them. And so the risk to the buyer at that point is that, yeah, they should get an attorney to look at it. The bottom line is that they knew built in, it was 2% built in, so they had a 2% negotiating power instead of picking up the phone and just giving the 2% to someone else. This is Tom O'Brien, this is TFNN. You stay right there. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finished down 31. NASDAQ off 15. S&P's up 7.5. And, folks, when I was just talking about the real estate market and brokers and Trulia and Zillow, one of the tigers in the den, said buyer's agent can keep you out of trouble. And that's a fact. So when I was walking you through that, okay, it is important to understand that also, because I've had a couple buyer's agents on the other side, and they do. What happens, it depends, I think, what state you're in. Not what state you're in, meaning are you going to get an attorney to look at your P&S? It seems in Florida a lot of people don't get attorneys, which blows my mind, okay? Because coming out of Massachusetts, that's how it was always done. So what happens down here, you're dealing with title companies, but that's not a big deal. So we happen to have attorneys, and that's how I deal with it. And so my point is that yes, a buyer's agent is a very good thing, and the ones I've dealt with thus far will keep you out of trouble. And there's some good buyer's agents out there. Because one of the things that a buyer's agent will do, and this is really cool, so check this out. This happens a lot. And you've probably seen this, these ads out there, whether it's Lennar or Pulte and all that. They're talking about closing costs. What a good buyer's agent will do is this. And this is always dicey, meaning for the person selling the property. So let's say that you want, let's say $150,000 for the property. The first negotiation comes in, let's say the first offer comes in at $145,000. You know, you look at the offer and say, oh, man, this is nice. Okay, it's not bad. You know, it's only $5,000 off what I'm looking for. That's the first get-go. And then what will end up happening, though, in additional terms, what you'll see in additional terms, a good buyer's agent will turn around and say that the additional terms would be that the seller would pay up to sometimes 3 to 4%. They'll put of the closing cost. Or additional terms would say inside of that the seller will pay $7,900, $3,900, whatever, a figure in there. So what that does, it does two different things. When you first look at a contract, you say, oh, man, this is good. I got it sold, right? Then you get to the end of it and say, oh, look at that extra money. So then what ends up happening, and in your own head, you're looking at it and say, okay, I want to sell it. Here's the profit. You know, you already know what you're into it for. If you take it like that, okay, so I'm gonna set up the deal for you on both sides, okay? So if you haven't seen these, this is how the deal works on both sides. If you don't understand being the seller, that what you can do, and this doesn't matter whether it's an FHA, VA, all those loans, okay, that basically have very heavy restrictions on them as to what can be done and what can't be done. If the property will appraise out at the value that, let's say we're talking $150,000, and let's say the appraisal on the property was $150,000, okay? And you as the seller would take $145,000. Let's just say that that's the get-go. If the bid is $145,000 and the seller and the buyer wants 3 or 4% paying on the closing cost, what you should be doing as you're going back to the buyer, what you do, and it's the same deal except that you're going to get everyone gets what they want, because what happens on a VA or a FHA is that the HUD statement looks different. The HUD statement always seems to be more before the closing than at the closing. So what that means for the individual buyer is that they have to have more money in the bank. That's how that works. The way to get around that, and this is going to be, because we're in the finance business, it's so wild, and it's particularly so wild after even the downdraft of 2007, that this is still in the regulations and you can do it, but it's a total mind blower, and this is what it is. When you see the Lennar close, we pay a closing cost and all that, what they end up doing, and this is what you can do as individuals also, is that you can go back to the buyer and say, okay, listen, you've offered me $145,000. You want me to pick up $3,500 in closing cost. I will accept $148,500, and I'll give you back $3,500 at closing. And that could actually be in the contract. It can be in the loan documents. It can be all of it, and that's the way it's done. But it's a mind blower, right? That part of the business blows my mind because of the fact it's like, okay, they're making all these credit restrictions for these people. It's very, it really, it's not that it is that it's much harder to get loans, and in particular the place that's appraised out. But it blows my mind that inside the restrictions, they still allow the aspect that the seller can pay the closing cost. And the key is, though, the disclosure. The disclosure has to be out there because you sign a document that there's nothing else that's out there. But guess what? And that's how you get around it, folks, because what ends up happening then is that the amount of closing cost end up getting wrapped inside the loan. If it's a VA loan, if it's an FHA loan, the VA I'm quite familiar with because we've done a bunch of them, not a bunch of them, but a few of them. And what happens there is that they there's a fee structure that goes in, and they tell all the veterans the fee structure goes right into that at the beginning anyway. But anyway, it's intriguing and understanding how you can basically make sure that you get those deals done. Now, if we go over to the Lennar, we take a look at Lennar for a second. This baby's hanging at highs. You know, right now you're at 43, 42, and we'll see. This could be a very large ABC structure on the way up. It's consolidated. The consolidation has gone all the way back from November of 2012. That's how this baby's consolidated. That's on the weekly basis. That's on the monthly basis. And a lot of this, no doubt, you know, is going to have to do with where do those bonds go. Because right now, you get bonds out here, 2.3, 10-year, and that's a big jump. October 15th, we're at 1.9. We're at 2.3 before that, spiked to 1.9, 2.3, 2.3 probably runs 30 years, probably about 4.1 again. The 30-year was pretty consistent about the last 7 weeks at 3.95. That 10-year bond, though, no doubt is going to make a difference where the 10-year bond is as to where the 30-year rates are. And what does that mean? Well, every tick down in rates is, bottom line, a tick up in the price of real estate. The correlation, folks, is flat out there. I mean, it's there in an incredible way, too. Because when you're buying real estate, you're signing, what is the monthly payment? Nothing's changed. There's a great article today, and what this article is about is Dubai. And Dubai, again, is going to the moon, their real estate. Dubai vows this time is different as the property boom stirs bubble. No way it's different. Every 15 to 20 years, folks, these bubbles, they happen. There's going to be another one here in the United States. That's another 7 or 8 years. That's just the way real estate goes. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Allie's coming up.